All right, so I know you guys are all unique, wonderful individuals, but I like to typecast when we have a really strong representative sample of the space here. So I'm going to typecast, and bear with me if anything is miscategorized. Michael represents sort of an institutional titan in the space. Genesis is a prime brokerage. They do all sorts of things for deep-pocketed investors. Vijay here, he is the champion of the decentralized movement. dYdX is a big force in the decentralized exchange space. They do a lot of really interesting things in DeFi. And Brett here represents FTX US, which is making a major play for the retail crypto market, offering a number of services even beyond crypto that are kind of interesting to discuss. So that's who we're looking at here. Use that as the context in which we have this conversation. So Brett, I'm going to start with you, and I think just the timing of this conference is super interesting, right? We, some say, are in the beginnings of a prolonged bear market. FTX US famously has the "Don't Miss Out" campaign, right? That works pretty well in good times, but may not be the best slogan for today's market. So I'm going to ask you, as it relates to building a major centralized exchange here in the US, what's the play in these market conditions?
Sure, absolutely. So FTX is more than just a cryptocurrency exchange. We're a cryptocurrency derivatives exchange where globally we represent over 180 countries. In the US, we acquired a CFTC-regulated derivatives exchange, hoping to offer margin derivatives to US customers. We have a US broker-dealer offering stocks. So for us, during this time, it's sort of the most important opportunity to just build out as wide an array of services as possible for our customers, because look, people are not going to stop and quit investing forever, whether it's crypto or stocks or anything else. They're going to come back to the platforms that have been growing and building and providing the best experience possible for them, and that's what we're aiming to do. And not just that, thinking about like our venture arm as well, where there's so much capital coming into crypto right now, people continuing to create new companies, to build, come to conferences like this. It doesn't seem like this is the end of crypto, but this will all come back pretty soon, and so we're hoping for that.
Gotcha. Specific to the exchange space, there's been a lot of headlines lately. Gemini, layoffs, Coinbase, cost-cutting, rescinding some offers that were on the table. Where does FTX US fit in the picture as it relates to some of those proclamations that we've seen from some of your competitors?
Sure. Well, we have the benefit of being an extremely lean company. I mean, total across all of FTX globally, we have around 250 people. So we're extremely small for how fortunate we've been over our 3-year history. And that's because we really want to focus on being very lean and nimble as a company. Crypto moves extremely quickly. We can't be mired in like the bureaucracy of a giant company. We want to be able to continue the sort of entrepreneurial spirit of our company. And so we're fortunate that we don't have to lay people off. We're growing, we're hiring, in many cases looking about whether we can acquire companies in this environment. And so we're excited that we're not slowing down at all.
Interesting. Lots of dry powder. Okay, good to hear. Michael, same question to you in the institutional environment, right? This is a bear market, could be a bit of a long one. When you talk to the big institutional players that turn to you for an array of services, what are you seeing and what's the plan?
So for us, so Genesis, we've been around since 2013, right? So this is now year 9 or 10 of our involvement in crypto, which like a year can seem like a long time in crypto, right? And we've been at this for almost a decade. And so I think for us, we've seen how many different, bull and bear market cycles, and we've always kind of come out the other side of bear markets, however long they last, as a much stronger industry, with much stronger like companies and products and services. And so for us, like, these pullbacks, these bear markets, to Brett's point, it's really like an opportunity to like really build. Right? Because as we've experienced, when the next bull market comes, like no one's really ready for the size of what the bull market is. And if you actually start building when the bull market is start to hit, you're way too late, right? And so what it really does take though is that commitment to, doubling down on hiring and continue to build in a bear market uncertainty, because you just won't be ready to kind of take advantage of the market when it really does kind of come roaring back. And my view is kind of the next bull market will be kind of like the biggest one we've ever seen. As it relates to institutional investors, the crypto native folks are nonplussed. They don't. This stuff happens. They're used to it. And I think they're able to kind of ride the wave, especially folks that have been through a cycle or two previously. It's the traditional, true institutional investors, kind of the old money that I call it, that might be just kind of getting involved into crypto. They're still trying to figure out their strategy. Many of them, while many of them are at least saying that they're going to kind of keep going, and we'll see if they really do. 2017, there were so many of these companies that were saying, hey, we're going to do this, we're going to do that. 2018, bear market comes and everyone's on pause, right? Then they restarted again in 2020, 2021, and then they almost kind of got there, and then maybe, now they're on pause. And so for us, I think it remains to be seen what the old guys, try to do in the space. But my hope is, hodling is not just about holding coins. It's holding onto your business plan. You can't do this in a really haphazard way in just a matter of months. It takes years of building. And I think companies with kind of true commitment to the space, I think you'll see them kind of continue to grow and invest and hopefully have real products really quickly.
Vijay, I want to put you on the spot. At the protocol level, what does that sort of bear market bidding look like? Is there something that you're doing that is different from what you had previously been doing, or is it just heads down, ship and code? What's the story there?
Yeah, so I think for dYdX, we've always grown pretty intentionally and thoughtfully in terms of team structure and sort of product build out and things like that. And so right now the team is about 35 people, and we've been able to build what we have with that. And so that's positioned us well for a bear market environment where, say, if we were much larger, we may have to downsize or something like that. So we've been able to kind of avoid those pitfalls and really just sort of put one foot in front of the other. I think from a market perspective, running an exchange, even a decentralized exchange, you are prone to sort of market forces and volatility. But it's probably the best business that you could be running in a bear market and probably a bull market, just because you continue to see the traders come in day after day to trade. And the reality is most of the traders who are active in, specifically in the markets that say dYdX operates and FTX, FTX US, are perpetual traders. And so they tend to be expressing risk in fully hedged ways. And so they continue to come and sort of engage with the ecosystems, whether it's centralized or decentralized. So we've continued to see that, and I think that gives us a lot of confidence to Mike's point earlier that the institutions really are here to stay, especially the crypto native ones, and the prop trading firms and the like. And then if you go a bit up the curve, the traditional players that have come in more recently, I think maybe have hit pause a little bit or moving a little bit more slowly. But I think compared to previous cycles, we feel like the momentum is there, and definitely agree with Mike. It feels like the next run up of the market is going to be the biggest one. So we're just focused on being well positioned for that and rolling out the launches of products that we think will take advantage of that, like a mobile app and things like that. Yeah.
All right, there's an or in our title, CEX or DEX. I think in reality, there will probably be more of a parallel system here, but for the sake of exploiting that or, I'm going to try to stir a little bit of debate. All right, Vijay, I said you were my champion of decentralization, and I want you to say why decentralized exchanges matter and are better than what centralized exchanges can offer. Why? Why, in your opinion, is that the case?
Sure. So I think there's kind of a few big reasons, and so I'll just sort of lay them out from first principles. So I think first is really user ownership over these ecosystems, where you've had a dynamic where users have been engaging with a lot of products in crypto, and companies have done extremely well, but there's not really this kind of community dynamic where the people that use the product can increasingly have a say in sort of the governance and design of that product, and really be more closely connected into the ecosystem. So decentralized exchanges afford them that via governance tokens and participation in community governance. And I think that really applies even at the institutional level. Just to hone in on dYdX a bit, if you go look at the dYdX community forums, you see a lot of the biggest and best names of market makers and prop firms and institutional funds who are in crypto are sort of actively debating proposals and design choices that affect the product itself. So I think that's encouraging to us at both the retail level, of course, but also at the institutional level. So I think user input is definitely, that sort of user input and sort of stewardship is something that we've seen resonate a lot with the ecosystem, and I think a big selling point. Second is transparency into the mechanics of what's going on with the marketplace itself, right? So dYdX operates a decentralized perpetuals exchange, but you also have decentralized spot exchanges and so on. And the benefit of a DEX is you can see that transaction history, and it's sort of in a provable, trustless way where you're not relying upon the venue or the intermediary to sort of report as to how things stand. So there's some kind of benefit there in a world where it's hard to really kind of attribute the validity of information. And then lastly, I think it's just this aspect of a level playing field where all users are able to connect to decentralized products in the same way. Whereas if you're talking about centralized venues or intermediaries, there might be preferential access for certain players and things like that. I think for all three of these benefits, there's sort of a work in progress as well, right? In the sense that with regards to the second point I made, dYdX is still a hybrid decentralized exchange. And when we use the word decentralized, we're really honing in on the non-custodial aspect of the product where you stay in control of your funds, but the matching happens on a centralized server for the time being. That is something that we plan to fully decentralize with the launch of our V4 product at the end of this year. So it's sort of you're swapping out parts of the jet in midair, and it's sort of a step-by-step rollout. But I think that's kind of the right way to do it, to really create trust and confidence in users.
Okay, Brett, so in this conceit, you are the big bad middleman, and I want you to say why DEXs are dumb and why CEXs are here to stay for the long run.
All right, so to start, I absolutely will not say DEXs are dumb.
Boo.
That is not why they made me come here. I'll also say, before I talk about why centralized exchanges are important, that I think that the black and white DeFi versus CeFi debate, especially as it occurs on the very orderly environment that is crypto Twitter, is somewhat counterproductive. I mean, how many people here have seen the Bitcoiners say that Ethereum is too centralized, and the Ethereum people say that Solana is too centralized, and Solana people say FTX is too centralized, and what really matters here is everyone up here and in the room is contributing some way, in a very important way, to the decentralized ecosystem. So think about where we would be. How many people bought your first Bitcoin as a perpetual DeFi product on dYdX?
Anybody?
No, okay. And how many people bought your first Bitcoin on Coinbase, FTX, or Gemini? Right, and so at some point, we have to hook up to the traditional financial system, and in order to do so, you have to have licenses, and you need to have like a compliance department and people you can call on the phone, and be able to actually provide the on-ramp into the ecosystem. And that's exactly what centralized infrastructure provides, is this place to really get the world of traditional money, traditional finance, traditional financial players into the system of cryptocurrencies and decentralized finance. And then people want to do all sorts of things. Some people don't want to deal with the custody of their own private keys. They'd like someone else to do that for them. As a species, we have a long history of paying someone else to do the hard work for you. This is like a normal thing, and that's what we do as a company. But some people are going to be more sophisticated. They're going to want to pull crypto out of their wallets and move it into DeFi protocols and yield farms and all sorts of things. And that's really great, too. That also has to develop. But we have to kind of play that role as the sort of regulated, centralized gatekeeper, that on-ramp into the system, and so that it can actually mature and grow.
All right, Mike, as a fellow on-ramp, when institutional investors get on-ramped into the system, do you see the demand for that journey kind of down the spectrum to more decentralized services? Or are most people content to be in league with an intermediary such as yourself?
So when it comes to how I view the centralized versus decentralized debate, I feel like, just as most of the room kind of raised their hands on a Coinbase, Gemini question, my first coins, I think, were Mt. Gox, actually, right? The beginner user is going to naturally, I think, kind of gravitate towards the centralized exchanges from a brand name or UI or whatever it is. They're just kind of go towards companies, like legal entities. Institutionally, people still want like a counterparty, kind of how they do things in other asset classes. They're used to trading with banks and broker dealers and using like, you know, and having like a company to, and I say this all the time, they need somebody to sue, right? When things go wrong, like institutions need the legal departments to point their finger and be like, they screwed up and I'll take you to court, right? And so there's that barbell where like the beginner newbie guys and like the older institutional regulated guys are going to gravitate naturally towards the centralized exchanges. The addressable market for DeFi today is in that middle, right? It's the guys that's not quite the newbies, but not the highly regulated institutional investors. And for us, you know, certainly having licenses matter to institutions. Having, you know, people will check our AML KYC policies and say, hey, as part of your diligence to onboard you, what is your kind of compliance policies? So all of that stuff certainly matters towards kind of the real institutional investors. However, I feel like DeFi is like the future, right? I feel like DeFi espouses like what crypto is ultimately meant to be about, right? Whether that's, you know, kind of the user input stuff that Vijay was talking about and kind of, you know, not your keys, not your coins elements to it and cutting out the middleman and all of that stuff. I think DeFi kind of espouses the values of what like crypto is sort of ultimately meant to be. And then the question is, how does that ultimately kind of change in the future? And can the regulated world move closer to the DeFi world? Or can the UI, user experience, branding of DeFi get better so that the newbies are just as comfortable buying on Binance or Coinbase as they would on dYdX, right? I think that's really kind of the test to figure out where things kind of go from here.
Yeah, it's not without irony that in a, you know, an entire industry built on, you know, the promise of peer-to-peer electronic cash, that there are really highly valued middlemen who tend to accrue a lot of value within the space. And I think it's important to note that you think that the DeFi is indeed that future state that is a bit more true to that original ethos. I wanted to ask you, Vijay, about sort of the institutional DeFi question. We've seen a lot of noise around Aave Arc, I think is the name of it, a bunch of other sort of institutional DeFi things that are that hybrid, right? They potentially give institutions someone to sue while also benefiting from some of the yield generating opportunities from the DeFi space. What's dYdX's involvement in the institutional DeFi thing, and do you see that narrative as being real or a bit half-baked at this point?
Yeah, so I think our general view as a team really is that those types of KYC ring-fenced solutions are interesting bets that are important to make at sort of a kind of an industry level. So they're great to see, but I think in terms of sort of the dYdX's team's approach, it's really kind of orthogonal to something like that, where we really are trying to build a best-in-class decentralized exchange, and we want to commit fully to that vision. And so we sort of exist necessarily in opposition to the intermediary businesses. And obviously we're kind of a little bit of a hybrid now, but like I was saying, we're laying step by step the foundation for us to get to that fully decentralized state with the product at the end of this year. And so we feel like that's an important mission that we need to stick to, and say launching a KYC version of the product would really be just recreating a centralized business. So we'll do sort of everything we can to operate our product compliantly and in accordance with the rules and regulations on a global basis. So that's something that we are accounting for and keeping in mind the regulatory environment. But as much as possible, we do want to build a KYC-less, fully decentralized product that users can access. And I think ultimately, just to kind of add to that point, like we really view decentralized exchanges and centralized exchanges as coexisting, and totally agree with Brett's earlier point that the centralized exchanges are great on-ramps for new assets coming into the space, right? Converting that fiat into your first crypto. And it's really a user journey where we go after the users who are already in crypto and looking to get to kind of that next level from, say, a sophisticated trader standpoint. And so that's really kind of the journey that we see. And so it's very much coexistence from our perspective. And we work with a lot of the same partners. So you'll see, a lot of the same institutions who are active on FTX will be active on dYdX. A lot of the same pro trader retail users might be active on both. So that sort of crossover, I think, also keeps things interesting at kind of an ecosystem level where you continue to have just cross-exchange arbitrage opportunities and things like that the institutions especially play a lot in. So that's kind of how we think about the world. But I'd say in general, as much as possible, we'll try to avoid recreating a centralized product on decentralized infrastructure. Yeah.
Gotcha. Brett, I want to change gears a little bit. And I want to kind of remark on this phenomenon of everyone kind of rushing to the middle, right? There's fintech companies who are increasingly adding crypto services, and there are crypto companies who are increasingly adding traditional finance services. You guys rolled out stocks, I think, 2-3 weeks ago, something like that. We're seeing Robinhood obviously up its crypto efforts. What is this race for the retail super app all about, and how are you approaching that race as these big giants look to also get there?
So a few different things. The first is people want to invest their savings. And there's a question, though, on a given day, how they want to invest their savings. And maybe you have people who are traditionally, they just invest in stocks and they think, crypto is a hoax or something. And you have people who are like, I'm all in crypto, I don't want anything to do with Tesla and Apple. But most people are sort of in the middle and they want to, on a given day, maybe allocate more towards one particular asset or another. But what they don't want to have to do is open multiple app accounts and move money back and forth through like the traditional banking system based on where they want to actually invest. And so we had a hypothesis that after seeing the success of Robinhood adding crypto, remember the Robinhood crypto product was they added Bitcoin and Ether, but no way to deposit Bitcoin and Ether or withdraw Bitcoin and Ether from the platform. So you're basically like playing the Bitcoin Ether video game on the app. And yet it was incredibly successful. I mean, they created basically a double-digit revenue stream as a percentage of their total revenue from crypto. And so what we thought was, well, we have a great crypto product. We can probably add an even better stocks product as well and give people that single sort of unified investing experience sort of in one place. The other thing I'll say about it is that we've learned a lot from the technological journey of creating a crypto exchange about sort of the importance of technology that can be up 24/7, about sort of direct-to-customer experience. And we want to be able to take as much of our learnings from that as possible and move that into the traditional space. That's why one big hot topic for us right now is we have this application with the CFTC to be able to enable direct margin in our clearinghouse. And we're not doing things the traditional ways with lots of the requirements for lots of intermediaries to be able to go to customers. We're not having a futures exchange that's open 12 hours a day, 5 days a week. We're trying to have a 24/7 real-time margin direct-to-customer product, which means it's going to take us longer time and it's harder to get through the application process. But we believe strongly in taking the lessons learned and the important developments we've made in crypto and bringing those back into the traditional sphere.
Gotcha. I think the same dynamic kind of applies in the institutional space, right? You got, Goldman Sachs, JP Morgan, these big traditional financial players increasingly inching down toward the crypto rabbit hole. For a crypto native firm such as yourself, how do you approach that question? Is there a similar sort of race to be the institutional super app? And would that be something that you would consider, or is it just too onerous to get that done?
No, I don't think so. Look, I think for a long time, the banks were, for the most part, I think, kind of dismissive of Bitcoin and kind of crypto generally. I think they were probably just kind of hoping that it was a fad and just kind of goes away. You'll notice that kind of the rhetoric of the big bank CEOs have now started to change to, I don't believe in it, but our clients want it. And so, as a way to like back into why, certain banks are now trying to create Bitcoin products and services and all of that stuff. Most of the big banks, though, kind of the biggest banks, are still kind of in the synthetic, cash settled only derivative format of kind of like crypto exposure. I'd argue that until you're actually trading spot, you're not really like in crypto. And so, certainly, though, the kind of the cash settled one is probably easier regulatory, operationally. You don't have to operate wallets and kind of things like that. And so it's certainly kind of an easier way to kind of get it done. And frankly, I do think that the client demand institutionally is real to force these biggest banks in the world to try to like do new things, which traditionally they're not very good at, right? It just takes forever to turn these like behemoth businesses to kind of something new. But as it relates to for a firm like us, we've always tried to create products and services that institutional investors expect and want in kind of the cryptocurrency asset class. And so for us, we will certainly be adding new products and new services. Our goal is to always kind of be that, to Brett's point, kind of the one-stop shop for institutions to be able to kind of express a view in multiple different ways. And so our businesses will certainly converge over time. I do think that, 3 to 5 years from now, our biggest competitors will be the banks, right? But I do think that certainly kind of trading spot crypto is way harder than I think a lot of these banks are probably thinking operationally, certainly.
All right, Brett, I want to close on you. We've got a few minutes left. It has been a big year for the FTX brand. Those 3 letters are everywhere, dude. You got to cool it with putting them on everything. Does that change in the current market, or is that something that we're going to continue to see more of? And if so, where will we see the FTX brand next?
Sure. Well, I don't think we're in the market for many more stadiums. But look, we are a pretty young company. FTX US has been around a year and a half, and many of our biggest competitors have been around for a decade plus. And in an environment where the thing that it takes to get the customer is trust and reputation, how do you leapfrog these giant businesses in an otherwise very noisy industry where people are very rightfully so, distrusting of the average sort of new crypto company that comes along their way, asking for their money to invest stuff? And so our efforts in that space of doing things like, putting the naming rights on the FTX Arena in Miami or getting the umpire patches in Major League Baseball, it's gone a long way to show people, well, these giant institutions that are popular outside of finance have done their due diligence on us as a company and determined that we are, more than legit. We're someone they want to actually stake their reputation on by partnering with us. That's gone a long way to helping us establish our foothold, especially in the US. And so we're continuing to evaluate new opportunities as they come our way. We get a lot of looks on stuff, but we are definitely being more selective now, and not because of a bear market, simply because we've done a lot of it already, and we're looking to sort of acquire customers the more traditional way now. So,
Got it. I want to go back to the original question about sort of other exchanges experiencing layoffs and downsizing. I want to press you on that. Does your commitment to bringing on more folks entail going after some of the people who have been let go at other exchanges?
Oh, absolutely. I mean, we've definitely have looked at a lot of the postings online about people who have had their offers rescinded or who were planning to go to one job or another, and we're looking to reach out to those people, absolutely. And I think crypto companies and tech companies in general, kind of across the board, including I'm sure that you guys as well, are definitely doing that, because I think talent is the most scarce resource in crypto, and we want to find those people and get them the jobs and get them in and build.
All right, thanks so much. I appreciate this conversation. Big thanks to Brett, Mike, and Vijay. This has been a good one on the future and present of cryptocurrency exchanges, both centralized and decentralized.